Welcome to Markets Now. I'm Michelle Work with Brad Kooima of Kooima Varilek. Grains all in negative territory this morning in the livestock futures. Hogs are mixed. Cattle are to the plus side. And Brad, let's talk a little bit about the cattle market. We're rebounding after a down day yesterday. I didn't see a lot of fundamental reason for us to be down. So was yesterday's action just technical in nature?
It looks to me like it was, and it was like one of those off days, right? I mean, national down day. The cattle weren't alone in their sell-off. Feeder cattle certainly, I thought, didn't help our cause either.
Right.
Hog market, grain market, et cetera, et cetera. I'm unable to point my finger at underline a certain fundamental reason why yesterday happened. But I would outline a couple of technical things that probably contributed to it. One, overbought market. One, the overall price of the market up here. I mean, these are historical highs. And then the 3 days in a row, October, the highest volume traded month, 3 days in a row, basically of attacking or trying that 189 level, and then not having that somebody else to buy it to get it through there. Yeah, those old sayings too, right? Bull market needs to be fed every day, whatever. Maybe, I don't know. If there is a fundamental thing out there well, really there's two things, I think. One, the gorilla in the closet on the fundamental side, Michelle, continues to be, why are these average weights so big?
Right.
And average weights, the one I watch is the steer and heifer carcass weight. They were actually down 2 pounds from the week prior, but still 23 pounds over a year ago. Now that gap is narrowing. We were in the mid 30s forever over a year ago, but so it's 23 now, but still much over a year ago. And we're entering a time of year where typically the weights start to go back up now. You get into these long-fed calves. Now, whether perhaps will play a bit of a part here. Again, the weight data, the when you get the comprehensive, the 100% where all the data is available, that data is 13 days old. You've heard me gripe about that before. That would have reflected, at least in my area, that really hot week. So the weights were down a little. I thought they might have been down a little bit more, but now as there's more heat through this whole cattle belt all the way down into Texas, I wonder if that might take a little of the edge off some of the gains and take a little edge off some of the weight too. We'll have to see, I guess.
So is the other gorilla in the closet the fact that we continue to hear about these kill cuts, or at least the packers are cutting kills?
Well said. That is the other issue here. And that seems to be the issue, that if you stand still long enough to listen to a packer list his reasons and propaganda, that's what he'll tell you. And there are packers that are taking some days off. There's a couple that'll be dark this week, Friday. There was one that was dark yesterday. There's one of the majors that have been running 32 hours, kind of doing a plant rotation, killing 4 days. These are all northern packers, by the way. And so, yeah, I've mentioned leverage many times on your program because it's huge. I mentioned leverage before in the past when I was advocating for negotiated cash trade compared to formula trade. It's still important. It's also important now. Now we've got a situation in the north where the supply of cattle is not large. In fact, it's significantly lower than what they expected based on those fall cattle and feed reports, and not enough cattle to go around. But the packer's going to try to gain some leverage back by backing up these cattle, so we can do our part to stay current, and that's what I'm encouraging everyone, including me, to do. That way you can pass a week, right? If the cattle are current, you don't have to take what they offer. So let's do our best to stay current, but let's keep an eye on these slaughter levels and keep an eye on the weight and the grade. Now, when I watch the grade, I watch all this stuff pretty carefully. I don't see any shifting in the grade, which would tell me that all of a sudden we're getting a lot more days. It takes days to create grade. So the grade is just stays the same, or it has. So I'll keep an eye on all that stuff too, and we'll try to check back with that later. But when you're current, it's not quite as easy to just back cattle up here in a matter of a couple of days or even a couple of weeks.
Yeah. So we talked about the futures looking tired, and I think maybe what was a little disappointing about not being able to get through some of the resistance areas is the fact that cash trade was so counter seasonally strong last week. 5-area weighted average up $1.34, which is unusual. So can we keep that momentum going this week, do you think?
Well, I'm going to call the cash steady-ish this week. I think north at 98 in the south, maybe even narrows that gap a little bit further. They had some 190 last week, so maybe they'll crowd that gap in just a little bit more. Yeah, I know. Yeah, here we sit here talking about like we got a wreck of a market, right? 198, pretty salty, right?
Oh yeah.
The first time we got there, I was pretty excited. I'll tell you that. So it's still a great market. It's still a place where most of these calves are pretty profitable. And by the way, the box beef has started to rally again. So the demand bears are pretty quiet right now. Talking about how rotten that was going to be here for July. Demand continued again. To like every post-COVID summer now, the demand has been all right through the summer. And I think it's because of what we've talked about before, where they're grilling more steaks on their own. So I don't know, you ask a good question, but the other part of that question though, to me is look at where futures are compared to cash. You've already got a big break. Yeah. Big break built in.
Yeah. And we've continued to see that, especially in the north. And to your point, choice boxes over 315 here. So obviously that's been part of this. Okay. So let's move over to the hog market. We had some wicked chart action last week with kind of some bearish reversals going on. We're looking kind of sloppy here, but can we hold?
Well, yeah, fun on the rally. That's why trading hogs is tempting, right? I mean, they are whippy, right? So straight back up off the lows, big outside reversal up, 2 weeks of follow through, and then we rolled it over and gap lower. Today is an inside day. Yesterday's lows is in a good spot. I'm watching August hogs. Yesterday's lows are in a good spot, and because it's 38% retracement of the leg up, so a good strong market will hold yesterday's lows. Okay, I don't know if it's going or not. I hear okay things about the demand for pork product. I don't hear so much okay things about the supply of hogs, which just seems to be relentless. Now, the weights over there are another factor. Now, the old days when it would get this hot, that was always bullish hogs. I don't know if those old rules work or not anymore, but usually when somebody says it's different this time, then it usually isn't different. So I'm going to stick my neck out and say yesterday's lows hold. And maybe we try to take this thing back closer to 96 cents or something like that basis the August. But watch yesterday's lows. I think that's important.
Right. And more new lows in soybeans this morning. The corn market is also following, and it's about weather. It's looking more favorable. You guys even got some rain over the last 24 hours in parts of Iowa and Illinois, right?
Yes, we sure did. Big rain here, anywhere from inch to close to 2 inches in northwest Iowa here. The beans, though, I think you pointed out accurately, the beans have been the weak link to this chain here all spring, summer long. And both from a world market situation and from a domestic situation, and we continue to have the polite word is non-threatening weather, but for a lot of the Corn Belt, pretty good weather.
But demand has not been as good on soybeans either.
The bull story on the beans is short to non-existent. On the corn, I can go with strong basis, ethanol demand. Export's actually pretty good. Market's holding the low so far, yada yada. Corn's kind of got a little bit of a story, at least in the old crop corn. But the anchor here, the weight of the beans, I worry that that's going to be bad enough to take the lows. Beans couldn't look worse on a chart, frankly.
Yeah, well, let's hope we don't have too much farther to go. But $10 looks susceptible. $4 on corn. Are those going to hold?
We take out the 403, which I'm afraid it's a matter of time because the beans are so weak. Then I think we test 375, 380. I think that'll hold. Bean thing's a little more vulnerable. 950 to 60 has got some historical support there. You don't have to go there for me, but I think the momentum of the market and the time of the year would allow for something like that. Yeah.
Okay. Not good news. We haven't been there to single digits for a while. All right. Thanks for joining us. Brad Kooima with Kooima Varilek. That is Markets Now.